The Kenya Private Sector Alliance is calling for a deferment of some proposals contained in the Tax Amendments Bill of 2024 and business amendment laws, warning that implementation of some of the proposed deductions will have a devastating impact on both local and foreign investors. Meanwhile, experts under the Okoa Uchumi umbrella called for formulation of a national tax policy that will inform Treasury on the most effective tax proposals. Seth Olale reports.
Submission.
KEPSA is opposed to the introduction of the new significant economic presence tax that will replace the digital service tax at an effective rate of 6%. While presenting its submission before the Departmental Committee on Finance that is conducting public participation on various tax proposals at the KICC, KEPSA called for the deferment of a section of other proposed deductions contained in the Tax Amendment Bill 2024 and business amendment laws.
Our proposal is just to defer this implementation as before, we would like to see the regulations. This is not a simple tax.
While warning against imminent collapse of alcoholic and tobacco processing companies due to increased taxation, KEPSA also called for the removal of proposed taxation of the registered family trust as well as proposed levy on imported glass products.
We also need to look out for our, I wouldn't say the wealthy, but at least these are the people who are investing into the country. So how are we helping them cushion their estates as well?
While calling for the formulation of a national tax policy that will inform Treasury on the most elaborate and effective tax proposals to cushion Kenyans against overtaxation, Okoa Uchumi warned against the implementation of the proposed development levy for imports as it will increase inflation.
The challenge of the current administration is then to help Kenyans to answer the question: will these additional measures result in better outcomes for me?
The Association of Gaming Operators in Kenya rejecting the proposed increase in betting stakes and increase of excess duty from 12.5% to 15%.
This industry has got a lot of multiple taxes, which we are actually overburdened with these taxes.
The Association of Pension Trustees calling for a change in legislation that will prevent county governments from withdrawing funds from the exchequer until pensioners are paid their dues.
So the proposal is for gratuities and other payments from a registered pension fund, provident funds, public pension schemes, or NSSF to be considered to be treated as free from tax.
So how does the government make sure that these changes that affect the same people do not affect them either at the same time, or even the way it affects them, it is well coordinated or cushioned so that we don't overburden Kenyans with so many changes, even when they are good?
With 124 entities scheduled to present their submission before the Departmental Committee on Finance and National Planning, main focus is on the manufacturing as well as income-generating sectors. Seth Olale, Citizen TV at the KICC, Nairobi County.